This is Margin Machine, where we follow the money behind AI. QuickBooks pulled in $6.6 billion in revenue last year. From small businesses, who mostly just need their receipts categorized. By the end of this video, you'll know exactly how AI platforms are doing that job for $99 a year, and why the obvious answer, that QuickBooks is just overpriced, is completely wrong. Welcome back to another price war. Let's start with the bill. Not the advertised price. The actual bill. QuickBooks Online starts at $35 a month for their Simple Start plan. That's $420 a year. Sounds fine. But a real small business, one with employees, inventory, maybe a contractor or two, needs the advanced tier. That's $235 a month. $2,820 a year. Then add payroll. QuickBooks Payroll Core starts at $50 a month plus $6 per employee. 10 employees. That's $110 a month. $1,320 more. Then add a human bookkeeper to clean up the mess the software creates but doesn't actually solve. Bench, the most popular option, starts at $299 a month. $3,588 a year. Add it up. A small business running QuickBooks the right way, software plus payroll plus bookkeeper, lands between $7,700 and $9,500 a year. That's not an edge case. That's the standard stack. And Intuit has kept it that way for 15 years. But here's where the story starts to shift. If you saw our video on Adobe charging $600 a year while an AI does it for $15, you already know where this is going. The same playbook is running in accounting right now. Meet the new stack. Keeper, an AI-native bookkeeping app, runs $20 a month for freelancers. For small businesses with a dedicated tax pro included, it tops out around $100 a month, $1,200 a year. Decimal, another AI-first bookkeeping firm, reportedly serves small businesses starting around $395 a month, but that includes a human layer on top of the AI, so the comparison is closer than it looks. The most aggressive player is Puzzle, which offers AI-powered accounting specifically for startups. Their base tier, $49 a month. $588 a year. That's not a stripped-down demo. That's reconciliation, real-time financials, cash flow tracking. For less than what QuickBooks charges just for the software layer alone, you get software plus AI automation. The price gap isn't 10%. It's 85% to 90%. And that gap is not closing, it's widening. But here's the part nobody mentions. $6.6 billion in revenue. That's a fortress. And Intuit knows something the AI challengers are betting against: switching costs are brutal in accounting. Your chart of accounts, your 5 years of transaction history, your accountant's familiarity with your setup, that's all locked inside QuickBooks. Migrating isn't an afternoon project. It can cost thousands in accountant hours alone. Intuit also has 7 million small business customers, and most of them are not technical buyers. They set up QuickBooks once, maybe with their accountant's help, and they are not moving unless something forces them. That's the moat. Not the software. The friction. Intuit also launched its own AI features, automated categorization, receipt capture, cash flow predictions, all inside QuickBooks, quietly, without making a big press release about it. They're not ignoring AI. They're absorbing it. The question is whether absorbing AI at the margin saves you when your entire pricing model is the thing being disrupted. Would you switch your accounting software today if the AI alternative covered 80% of what you need? Tell me in the comments, because the answer actually predicts who wins this war. This is where everyone gets it wrong. They assume the AI bookkeeping startups are the winners. Some of them will be. But the bigger money is moving somewhere less obvious. When a small business drops their $300 a month bench subscription for a $49 AI tool, that $250 monthly delta doesn't disappear. It gets reallocated. And a big chunk of it flows to whoever sells the AI infrastructure underneath these new tools. Most AI-native accounting apps are built on top of OpenAI's API, Anthropic's Claude, or increasingly Google's Gemini. Every transaction categorized, every receipt parsed, every cash flow report generated, that's an API call. That's token spend. The AI accounting startups are the front end. The model providers are the back end. And the model providers get paid regardless of who wins the bookkeeping war. It's the same pattern as every gold rush, the shovel sellers win. There's also a second-order winner hiding in the data. These AI bookkeeping tools see every transaction a small business makes. Every vendor, every invoice, every payroll run. That's extraordinarily valuable data for lending decisions, insurance pricing, and financial products. The accounting software was never just accounting software. And that's when it gets really interesting. Let's put the numbers on the table clean. A 10-person small business, QuickBooks Advanced Plus Payroll Core Plus Bench Bookkeeper, $9,228 a year. Worst case, with add-ons and a CPA for tax prep, closer to $11,000. The AI-native alternative stack, Puzzle or Keeper for bookkeeping, Gusto for payroll, which starts at $46 a month plus $6 per employee, so $106 a month for 10 people, and an AI tax filing tool like Column Tax for business. Total, around $2,100 to $2,500 a year. The savings, roughly $6,700 to $7,000 a year. For a freelancer or a solo operator, the math is even sharper. QuickBooks Simple Start plus Bench Lite, about $4,200 a year. Keeper's Freelancer Plan, $240 a year. Savings, nearly $4,000. That's real money for a small business. And the AI alternative isn't doing 60% of the job. For the majority of small business financial operations, categorizing, reconciling, reporting, it's doing 90% or more. The 10% it misses tends to be complex, judgment-heavy work that a CPA should be doing anyway. We follow the money here every week, subscribe so you don't miss the next trail. Here's the number Intuit should be losing sleep over. Not the number of customers who've already left. The number who are about to. Kepner Trego, a management consulting firm, found that enterprise software churn tends to accelerate in what they call the awareness cascade, where enough early adopters leave, get vocal about it, and suddenly the friction of staying feels higher than the friction of switching. Accounting software hasn't hit that cascade yet. But the reviews on Keeper and Puzzle and Decimal are stacking up fast. The YouTube tutorials showing small business owners how to migrate are getting hundreds of thousands of views. The influencer accountants on TikTok are doing the math publicly. Intuit spent $12 billion acquiring Credit Karma in 2020 to diversify beyond software. That acquisition now looks less like ambition and more like insurance. The signal is this: when a company your size makes a $12 billion bet on something adjacent to your core product, they know the core product has a ceiling. The ceiling just got lower a lot faster than they planned. And that raises one more question, one we haven't answered yet. The AI tools are cheaper. The savings are real. But there's a company in this space that has raised over $100 million, charges more than QuickBooks, and is somehow growing faster than any of the cheap alternatives. It doesn't make sense, until you understand what it's actually selling. If you want to know which AI accounting company is winning by charging more, not less, click the video on your screen right now.